Hey everyone. Welcome back to the channel. If you're interested in trading, especially binary options, you're in the right place. Today, I'm going to reveal a profitable binary options strategy that actually works and how you can start using it to earn online. But before we dive in, don't forget to hit that subscribe button, like this video, and leave a comment if you have any questions. Let's get started. Alright, so let's start with the basics, especially for those of you who might be new to binary options. A binary option is a financial instrument where you predict whether the price of an asset like a stock, currency pair, or commodity will go up or down within a specified time frame. Simple, right? At the end of the time frame, if your prediction is correct, you make a profit. If you're wrong, you lose the money you invested in the trade. That's why it's called binary, because there are only two outcomes, win or lose. Now, while binary options sound simple, there's a lot more strategy involved to make them profitable. That's where our strategy comes into play. Before we jump into our winning strategy, it's important to understand why most binary options strategies fail. A lot of people think it's all about guessing whether the price will go up or down, but there's more to it. One major mistake is lack of discipline. Traders often get greedy, taking unnecessary risks or chasing quick profits. Another problem is not understanding the market conditions properly without the right market analysis, you're just making random guesses. And finally, there's the issue of *** not using proper risk management, which is crucial if you want to be successful in the long run. If you don't follow a structured strategy, you're basically gambling, and that's not how successful traders operate. Now, let's dive into the strategy that's actually proven to work. Here's the strategy I use, and I'm going to break it down step by step. We'll be using technical analysis, market trends, and *** risk management to make informed trades. The core principle here is, *** trade with the trend, not against it. First, we need to identify the trend. This is the most important part of the strategy. A simple tool you can use is the moving average indicator. By using a 50-period moving average, we can determine the direction of the trend. If the price is above the 50 mega amperes, it's an uptrend. If it's below, it's a downtrend. Once we've identified the trend, the next step is to look for entry points. For this, we'll use the RSI Relative Strength Index to identify overbought and oversold conditions. If the RSI is above 70, the market is overbought, and it might be time for a downward correction. If the RSI is below 30, the market is oversold, and it could be time for an upward move. Now, the key here is to only enter a trade when the trend is confirmed by both the moving average and RSI. This gives us a much higher probability of success. Now, let's talk about risk management. No strategy works without proper risk control, and this is something a lot of traders overlook. Let's dive into how you can protect your capital while increasing your chances of success. First, you should never risk more than 2–3% of your trading capital per trade. This ensures that even if you lose a few trades, you'll still have enough capital to keep trading. Next, you should use a stop loss for every trade. This is especially important in volatile markets. Set your stop loss to a level where, if the market moves against you, you'll exit the trade and preserve your capital. Lastly, take regular profits. Don't let greed take over. Set a target profit level and stick to it. Once you hit your profit goal, stop trading for the day and come back the next day refreshed. Now, let's put everything we've talked about into action. I'm going to do a demo trade using this strategy so you can see how it works in real time. Perform a demo trade on a platform, explaining each step as you go. Identify the trend, confirm with RSI, and execute the trade. Here, the price is above the 50 mega amperes, indicating an uptrend. The RSI is around 40, not oversold but heading up. So, I'm going to place a call option. I'll risk 2% of my capital on this trade. Success. As you can see, the trade ended in profit. This is how sticking to the strategy can give you consistent results. Now, let's talk about a few common mistakes that traders make when using this strategy, and how you can avoid them. One common mistake is trading during sideways markets. The strategy works best during clear trends, so avoid choppy markets where the price moves up and down unpredictably. Another mistake is not sticking to your strategy. It's easy to get tempted by impulse trades, but always stick to the plan. And finally, make sure you * practice first * with a demo account before risking real money. To wrap up, binary options can be profitable if you follow a solid strategy and practice proper risk management. Stick with the trend, use tools like moving averages and RSI, manage your risks, and avoid emotional decisions. Remember, consistency is key. If you follow this strategy and take your time to learn and improve, you'll have a much higher chance of success. Thanks for watching, and don't forget to hit that like button, subscribe for more content, and comment below if you have any questions. Until next time, happy trading. Thanks for watching. Check out the videos on the screen for more tips and strategies. See you in the next one.